Welcome to this edition of IG Live. We are 5 minutes away from the Bank of England interest rate meeting, where we are widely expecting a 50 basis point increase in interest rates. The base lending is expected to rise from 3.5% to 4%. Now, it's interesting if you read back to what happened last month, where we got a 6-3 or 6-3 majority to raise rates. The fact is that of those that wanted to raise, we actually saw someone hoping to get a 75 basis point increase in interest rates. So we'll have to see how the spread goes today. But the background is, of course, that we've got one of the highest prints of consumer price inflation across Europe. And it's that which is the main focus of the Bank of England. It remains the main focus of any central bank because it's all about trying to achieve a lower inflation rate. The target for the Bank of England is 2%. We are, as we know, well away from that. And there are various pressures that the UK has no control over either, in terms of trying to monitor what's going on in the interest rate or the consumer price inflation number. But it does have control over interest rates. But the trouble is with that is that we already know from evidence from the Office of Budgetary Responsibility that the UK is already in recession, according to the data out that we saw at the back end of last year. Q3, Q4 expected to be negative. So where do we go from here? And what's the Bank of England do? It's a fine balance to achieve. Let's take a look at what we're expecting today, because it is 50 basis points where we are looking for a further interest rate rise from 3.5% to 4%. I think I said earlier we went from 3.5% to 4% last time around. It was 50 basis points last time to 3.5%. So it's just a question of whether or not the bank is going to deliver what's expected. And for this, we'll take a look at a couple of markets where we've got, first I want to show you this chart here, which is sterling against the US dollar. But also it's worth thinking about what's happening as well with what's going on with sterling against the euro, because we've got the European Central Bank meeting today on interest rates, where we're widely expecting a further 50 basis points from that group of central bankers as well. Chris Beecham, IG's chief market analyst, joins us now with his thoughts on where we go, what we do, how we set up a trade, and what the advantage is in looking at this number as to whether or not there is an edge to be made for traders. It's
an interesting one for BOE, I think, really. Given the gloomy outlook for the UK economy, but they know how CPI is still high. So there's a very tight line they have to walk here. You had the Fed last night obviously hinting at disinflation for the first time, which is why the market got so excited, and you had the dollar weakening yesterday. It's unlikely we'll see the same from the BOE, I think, because they still think there's more to go in terms of rate hikes, although given that the Fed is beginning to ease back as well, you might see that dovish caucus emerge, and we were discussing before we came on air that maybe you'll see more people voting for a slower pace of rate hikes or even pausing it entirely. So that's where you might get some weakness in sterling. But as you can see, the trend against the dollar is still firmly up here. For the time being, we haven't really gone anywhere since the middle of December in the pound, but the dip in early January was firmly bought, and we're back above the 200-day moving average. So you could argue that we're still kind of leaning bullish on this one for the time being, with the note, of course, that 124 has been a big area of resistance over the past month and more.
And of course, that's sterling against the US dollar. As I said as well, we've got to look at this as well, because in the context of the Eurozone and the European interest rate picture, if you look at this chart here, sterling has fallen below support against the euro. In other words, the euro's risen against that weaker sterling trade. We've just got a peak above the highs that we saw back on the 12th of January. What's the difference between sterling dollar and euro sterling?
Well, I think for here, it's much more of a comparison that we know that the ECB is also committed to hiking. And of course, remember, this one's going to be a volatile one today because the ECB is following hard the BOE's heels at 115. So I think, again, you're seeing momentum shift to the buyers on this one. That rally from the January lows has continued. The fact we pushed above the early January high now this morning is an interesting one for euro sterling. So definitely one to watch. Then maybe if the ECB is more hawkish than the BOE, perhaps that's where the gap, I think, comes, because we know the BOE moved on interest rates before the ECB. So perhaps a lot of that is now done and dusted in terms of how much further they have to go. That might give, again, some room for outperformance here. And remember, there's a lovely trend there, really, arguably. It's a bit choppy, but moving higher since June. So arguably the momentum still lies to the upside here.
Yeah. Okay. All right, Chris, thanks so much indeed. Let's just move and take a look and remind ourselves as to where we are with this. We are awaiting this news any moment now, where we are expecting to see the move in interest rates up by a margin of 50 basis points to 4%. It's the 10th consecutive move in interest rates we saw last time. It's a record in terms of the direction of travel for central banks or for the Bank of England, and we're awaiting the developments as we see them. Let me just bring up this chart of sterling against the US dollar again and maintain this on a minute-by-minute chart so that we can get the full details of what's happening with the news that we're just about to see break. It's a 7-9 vote to raise interest rates. It's gone to 4% as expected, so 50 basis points. None of the voting members voted to leave rates on hold. I beg your pardon, sorry, 2 voted to leave rates on hold, my apologies, and 7 voted to raise interest rates. I don't know yet what the split is between those that wanted to see interest rates up, but 50 basis points is what we got to 4%. This is the market reaction for sterling against the US dollar. In half an hour's time, we'll get the press conference where Andrew Bailey and a couple of other chosen members of the team, the chief economist of the Bank of England normally attends the press conference. It'll be interesting to see just what it is they're saying. This push up you can see here on the daily chart is sterling rising against the US dollar. Just going back to the daily chart to prove to you that in fact it hasn't actually made an awful lot of difference in terms of the big picture. This move up that we saw for sterling yesterday was weakness in the US dollar driven by that interest rate decision by the Federal Reserve. I wanted to quickly update you as well on what's been happening with sterling. I saw sterling peak above this line of resistance at 88.97. Or I should say the euro peaking above that line against sterling earlier on. But you can see here now that the money is going into sterling. This is euro weakening against the euro currency, and this is ahead of that European Central Bank interest rate meeting. Chris, have you got anything from the headlines?
Just the interesting comments on the outlook, really. Now expecting inflation to be weaker than they thought at their last meeting, something to note there. And wage growth will actually be slightly weaker as well. I'm just trying to find the GDP numbers. Now expecting GDP for a quarter on quarter for 0.1% for Q4. Previous in December, that was minus 0.1%. So slightly. So
that would skirt us around a recession.
So yes, yeah, exactly. A slightly more optimistic outlook here from the BOE. I just find the inflation suggestions whether inflation would be weaker, expecting GDP growth stronger. So more. I think that's the reason why you're seeing about sterling strength coming in there, just in the immediate aftermath of that. Saying perhaps that the UK economy will be better than we thought. And of course, it's a question of degrees with the UK economy at the moment. But nonetheless, that might account for some of the sterling strength. It's sort of arguing that more tightening of monetary policy will be required if there would be evidence of more persistent pressure. So that downturn in inflation forecast a little bit, just giving a boost to the outlook there. Also, it says it would no longer. The statement says it will no longer respond forcefully, or it doesn't say that anymore, it will respond forcefully, or that further increases may be required. So maybe there's a tiny bit of a dovish caucus there, but given the Fed was so, well, viewed as so dovish yesterday, and that was no pushback on the talk of disinflation, it looks like there's given some scope for the pound to make headway against the dollar. But as we say, that 124 level we were talking about beforehand, still very much the level to beat here.
Well, let's bring up the chart on this, because I think it is important to continue to monitor what's going on. That 124 level, yes, hasn't been breached today, but as Chris was saying, money going into sterling. What's all this mean for where we go? Because we had heard last night from the Fed, the dollar weakened last night because of what was perceived to be perhaps maybe more dovish comments from Jay Powell than would otherwise have been the case. What do you want to see from the Bank of England to underscore what you've heard here in terms of headlines? What do you want to hear from the BOE at the press conference to demonstrate that it's time to put more money into sterling?
I think they would argue that maybe it's the outlook here that we're dealing with, not necessarily the path of monetary policy. It's whether they think that well, if we set to show they do think that maybe the GDP outlook is stronger than they previously thought, and I think the decline in energy prices has a lot to do with that, and weaker inflation. So that's the message I think they want to reiterate, is perhaps the outlook for the economy is better than it was. We're not as bearish as we were on the outlook. That would give sterling the lift I think it needs in the short term, really. Again, it's so much a case of the US economy looks stronger, so you kind of wonder if this rallying cable has a lot longer to go. But overall, it seems like for the moment it's content to at least hold these levels, and we'll see whether it's got the strength to push higher.
Yeah, let's wind the clock forward to take a look at what's happening with the European Central Bank meeting and the expectations there. This is the minute-by-minute chart for euro sterling. I want to take a look at the daily chart just to give us a better idea as to what's happening. In fact, you can see now this level of 88.97 again has been breached by the euro, stronger euro against sterling on the session. We're off the highs, but nonetheless, it's certainly looking as though we're going to be holding this line, not seen since the 29th of September last year, going into that ECB meeting.
Yes, so I think the strength seems to lie on the upside here, really. Take the ECB to be fairly robust on the outlook to give it a move in the short term, but overall I think people are still assuming that the Eurozone economy has a brighter period ahead of it. And again, it's all about this energy price decline. That was the big driver in optimism. You've seen sentiment surveys for businesses and consumers improve over the past month and more because they're seeing weaker energy bills. So I think a lot of the changes in the outlook have come because of this decline, and people just seem more content to take risk on at the moment. So that's the message from last night's Fed meeting as well.
Yeah, this is a Brent chart just to illustrate what Chris was talking about. I also understand as well that I think there's recent highs for storage of gas across Europe, so there's a lot of reasons as to why you would want to consider lower fuel prices. Just one other area of the market we've got to talk about, and that is what's going on in the equity markets. FTSE 100 is little change from the open. If anything, we're down 0.1% on the 24-hour markets on from the close last night. In other words, holding on to much of the gains we saw late in the trade yesterday, which is really generated by that Fed decision on interest rates. When talking to clients about the FTSE 100 or indeed the FTSE 250, what's the message?
Well, for the 100, it's obviously a global economy play, but as that optimism returns, you are seeing willingness to sort of move into the FTSE 100, even at these levels. Now, it's had a spectacular performance from October, as you can see on that chart there, only 1,000. We're 1,000 points higher, essentially, from where we were. So maybe there's a lot of good news baked in at the moment, but because you've got slightly less hawkish central banks, let's put it that way, and an improving outlook for the global economy, and so far earnings season has been very supportive. Even with that decline in oil prices, which of course is a big weighting for the FTSE 100 with Shell and BP, maybe there's reason to be more optimistic here. For the 250, a bit less so, of course, suffered more last year, really the mid-cap. It wasn't really the FTSE 250's year. But again, decent recovery here. I think the surprise of 2023 so far has been how optimistic people have become in such a short space of time and how resilient asset prices have been. And I think that's all down to changing expectations. So if that continues to move the right way, that does bode well, I think, for indices.
Yeah, interesting point actually made there. There's a nice little trend underway for the FTSE 250, and in fact in today's session we are now trading at levels not seen since the 17th of August, and in fact as we speak we are very close now to breaking that line to go to levels then not seen since the 6th of June. Of course the FTSE 250 does have, as you say, a very different makeup from the FTSE 100.
Well, exactly. This is the message you need to understand. The market is telling you where you should be. If we're pushing on above those August highs, that's a fairly solid sign that for the moment, the sellers aren't in control here. If you go back below, say, 19,500, back below the 200-day, then you start to revise your view. But for the time being, it looks like the buyers do have the upper hand here.
Yeah. Okay, Chris, thanks so much indeed. Chris Beecham, IG's Chief Market Analyst, with his views in the wake of that interest rate decision from the Bank of England, which is broadly in line with expectations. What we have yet to see and feel are the words from the mouths of those that will be at the press conference at the bottom of the hour. And you can catch up with that, I think, on the BOE website where they publish that, and indeed across other business channels. But you can continue to trade sterling and indeed the euro sterling trade as we go into the European Central Bank interest rate decision. I'll be with Axel at 1:10 UK time with that interest rate decision from the European Central Bank. They're widely expected to raise interest rates by 50 basis points.